got an interesting update from Challenger this morning. This is their August employment or employer layoff update. There's some really interesting read-throughs here. It's sort of really negative and not that negative all at the same time. So US-based employers announced 75,891 job cuts in August. That is a 193% increase month over month, but only a 1% increase year over year from August 23. For the year to date, companies have announced 536,000 job cuts. That's actually down 3.5% from the 557,000 that they had announced through August of last year. However, interestingly, this August, excluding August of 2020 due to COVID, this August was the highest August for layoffs since 2009. And then for the first time since April, employers specifically called out artificial intelligence, AI, as a reason for job cuts. So last month, for the first time since April, employers called out AI as a reason specifically for job cuts. So last month, 6,000 jobs were cut due to AI, all of which, interestingly, occurred in the technology space. And year to date, AI job cuts are just over 7,000.
Yeah, on that other channel, CNBC, I actually had it on for some reason. I think I was driving back to the home office in reaction to the softness in the beige book. Leisman, who's just a bozo, he's like, well, it just doesn't. That's just not what we see in the other data. And then you got Josh Steiner go through all the data, and that's exactly what you see in the data. So it's one thing to make fun of something or to criticize something. Making fun's better because it's a little funnier and it's less sadistic. But it's like you can quite literally turn that on and listen to absolute unequivocal lies and bullshit. There's a reason why his name is Leisman, right? So God put his name, like the first part of his name, that way. I mean, that is his job, or to spin, right? Meanwhile, him and his buds or whatever, they're all begging for the rate cuts. So you only get the rate cuts if the data is slowing. The data is clearly slowing. We had a quad 4 in July. That is all reported data, Leisman. And that's the data that we're looking at, right? We're not looking at a TV channel that's long past its time as a comedy or running comedy. So I think that like now, the setup here is very interesting. I mean, we just obviously made a pile, and that doesn't happen all the time. I'm not trying to be cocky about it. I'm being confident, Keith. Don't forget, is that when we get something right for the right reasons, we're going to make a lot of money, and we did. Right now, the question is, like after we get all these data points, or as the market prices it in, don't forget that I'm playing the expectation that the Fed cuts by 50 basis points. I don't know that the Fed's going to cut by 50 basis points, and neither does Steiner. So you could get to a place, and I'd call this part, I'd say that we're positioned explicitly for the expectation of the rate cut and for slowing data, quad 4 data. But I'd also say that when it gets to game time, I'd call it a coin toss on Powell cutting by 25 instead, or 50, right? And that, if he does that, after all this happens, that puts big blow up risk into the market, equity market, right? So it's a very dynamic and ever changing situation. When you think about front running the Fed, what's priced in, what data points are out there, what are being discounted, what are being leaked. But I and this is a feeling. I don't go big on feelings in our process, but I feel like we're more on our game and in sync as a team than we've ever been.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.